It's Monday, August 10, 2015, UPBOptionMillionaires.com. Look at the move we've had off the lows on Friday, and I'll get into some of the key support levels that we hit and went through on Friday. Now above that, look at the move to the upside of 0.7% to the upside, recovering a lot of last week's losses in one overnight rally to start the week. If you go back from a longer term perspective, I was looking at this inverted head and shoulders pattern possibly coming to fruition. We found support again here. Are we going to put in some sort of a lower high, which would imply a move to new lows here for the spring and summer of 2015 after a long bout of consolidation? Long-term trend line support, you can see it very clearly where that lies right here for S&P 500 futures. It goes all the way back to February. So we'll see if we can hold that level. Right now, a breakout above this trend line would still keep higher prices and new all-time record highs in focus. So it's just something to keep an eye on, but you also have to remain key to the long-term trend line support. I'll just look at Tesla real quick. You can see it starting to roll over here, possible head and shoulders pattern. But let's look at the NASDAQ, the triple Q, and you can see the 110 level on Friday held. That's somewhat bullish. S&P 500, the SPY, got almost up to the 208 level. And finally, IWM, which is the 120 level, been so key throughout the consolidation here we've seen in 2015. Come back to it again. Did not get over it. Tried to just before the closing bell on Friday. But something to keep an eye on here. If we can hold above this level and look at each of the times we've visited this level in 2015, embarked upon a $7, $8 move to the upside. So we'll see if that's the case here, or is this just a topping pattern? We have our high here, and we're putting in lower highs. So that's something that you don't want to see pull a trend line across. We need to get it back over 121.50 to get me kind of bullish here short term. I'm still bullish on this market, but again, you have to be a realist. I'm not going to fight the trend against the trend like some people have done over the last 6 years for the S&P 500. Oh, it's going to go lower now. Here it is. Oh, this is the time to short, and each time the market is pulled back. Seemingly a significant bounce is underway, but it's the first real big consolidation phase that we've had since the lows of March 2009. So something to keep in mind here. Are we setting up for a move to the downside or the upside? I'm still biased to the upside, but you know what? Once we break the trend here and we start pulling back, I'll be riding along the coattails of the bears, the few of them that are left. Another chart that has me thinking also is the biotech. The biotech index broke through support late last week, had a 4% day to the downside, and then started off Friday with a 2% move to the downside before a quick recovery late in the trading session kind of saved some of those losses. But you can see it's broke through long-term trendline support. So if we can bust over this 372.50 level, I think we're heading back to lower prices. That biotech bubble that everybody's been talking about will slowly start to deflate. Twitter upgraded this morning. Again, I like this stock for a long-term move up over 35, but it's going to take some time. Look at the sell-off we had post-earnings. Volume's picking up. The CEO search is all sorts of rumors circulating this weekend. And also upgrade this morning to a $35 price target by some analyst that I'd never heard of before. But the bond market continued to rally on Friday. So if you think the jobs report was pretty good, you would think, hey, this is going to move up expectations for a rate hike. The bond market continued to get bought. Look at this, moving up to highs we haven't seen since before the summer started. So it remains in no man's land here. We're going to get back up to trendline resistance. So we're going to come back to support, kind of in the middle here. So I'm just going to let it do what it's going to do, but I still think from a long-term perspective that we're heading back to 100 for TLT. A couple other stocks to watch. Apple up this morning. Carnage last week. Absolute carnage. Found support at the 112.50. Nice bounce. We're continuing upward. We're going to see a nice little V-bottom here for Apple. Distinct possibility. September 9th date for their latest iPhone launch is the rumor out there. Also, energy last week took it on the chin. Is this some sort of a bear flag forming here? A consolidation for continued move to the downside? Long-term chart perspective, look at this move we've had. This is a broken trend, folks. The S&P 500 that everybody continues to want to short and say it's overbought. Oh, this is falling. Continues to head in a, upward fashion. This is a broken trend. We had a nice uptrend from the lows in 2009. The trend is now broken. we perhaps extended some of these losses to the point where it might make sense to get in for a bounce, which is something maybe I'll look to get into as I did last week for a really quick trade. But ultimately looks like it's going to continue to head to the downside. And finally, the gold miners, GDX. If you look, pull up a 20-year chart, you can see the carnage below the 2009 lows. Are we consolidating here for a continued move to the downside? Indeed. A distinct possibility. I talked about FCX as the ANF of 2015 has not let me down. Look at this move to the downside. Looks ready to hit into single digits. Yeah, everybody was mocking me last year and the year prior when I was talking about downside for this. And, oh my goodness. It's not really funny. It's not funny, but we'll see if we can get a bounce here short term. It's been a pretty nasty decline to the downside for FCX down at $10. Who would have thunk it? All right, UPB. I'll see you in the chat room at optionmillionaires.com. It's a Monday. It's going to be a great week. Everyone take care.